In order to grow, you're going to have to overcome that fear of unknown. You're going to have to put your neck out there and say, I'm committed to $1 million. I strongly believe in the deal. I don't know who is going to invest, but I'm going to make it happen. First raise was $500,000.
Tim is one of the most authentic and genuine people I've ever met.
Sincerely believe he's coming from a position of giving, and that means a lot.
You're going to make huge progress.
Welcome everybody to today's capital raising show. I'm your host Tim Mai, and today I have an amazing capital raiser syndicator on the line with us, Mr. Alex Kholodenko, amazing capital raiser. Him and his company, Wealthy Mind Investment team, in the last 3 years alone, acquired $1.25 billion in multifamily, over 10,000 doors, and place over $42 million of investor capital. Alex focuses on investor and experienced operator relationships while creating win-win positive outcomes. His firm mission is to help busy professionals create tax-efficient, multiple passive income streams and live the life on your own term. Wealthy Mind Investments was formed based on one of the success principles of the book Napoleon Hill, Think and Grow Rich, and that's imagination. If you can imagine a life filled with happiness and wealth, then you can absolutely create one. So with that, let's welcome Mr. Alex Kholodenko. Welcome, Alex.
Yeah, thank you, Tim, for an opportunity to share with everyone what I've been able to accomplish. It's an effort. And first, I want you to believe yourself, because the guy from Ukraine who to this country was speaking English 30 years ago accomplished what I've been able to accomplish. You are able to accomplish anything that you put your mind to it. So the name of the company that I came up with was Wealthy Mind Investments, because I believe in success principles. Success leaves, and if you can imagine that you can achieve something, just time and effort to it, anything is possible.
Awesome, yes. And you are definitely the embodiment of that, right? You guys have achieved so much in so little time. So it's really been amazing. So share with us, Alex, how did you get started into this multifamily syndication space? What was either like a aha moment or a challenge that you will overcome that got you into where you are now?
Yeah, happy to share more information. So I've been in Silicon Valley for the last 30 years. My background has been in technology. I used to work in a corporate job, high-paying W-2 for many years. And about 2015, I was very stressed out. I didn't like my work. I had a terrible working relationship with my boss. My back has given up on me, and I was paying high taxes, and I was about to get laid off. And I said, you know what, there's got to be a better way out there. So I took about 6 months off, and I started to look around me and looking around at other people, what everybody has been doing. As we all know, we have choices in life. And I started to look around what kind of opportunities that are out there. I could have stayed at the corporate job, which I actually did, but I started to look around. If I continue to do what I've been doing, which is, jumping from job to job, saving for my 401k, paying high taxes, where would I be 5-10 years from now? So my journey has been a long journey. I'm not an overnight success. In 2015, I said, what if I start repositioning some of my portfolio, some of my personal savings from stock market to real estate? So I tried a fix and flip model. That didn't work. I bought a single family home. That seemed to be a lot of people how they started, and so was I. And the cash flow was so little, and I didn't want it to be on the managing side. I said, there's got to be a better way. So I kept looking, and one way to another led to multifamily passive investing syndication. And for many business professionals at that time, I still had a job. That's a perfect vehicle to build wealth. They'd like to invest with hopefully an experienced operator and just let their money grow and diversify from the volatile stock market. So that's what I did. That's how I got started. I was one of the early pioneers that ended up investing in many syndications through crowd platforms. And some of them did really well, but some of them actually did bond out completely. So I lost entire principal on several deals. But over time, I kept learning, I kept going to different conferences. I knew at one point that I will be an active investor. And in 2019, after another job change, I just decided to start a company together with a good friend of mine and business partner, Ashish Sanand, that I've known for 20 plus years. And we never looked back. Since then, we've done about 15 investments, all in multifamily. We've raised over $42 million. Our investor list just kept growing, and we never looked back. I mean, it's been an amazing journey, but like I said, there is a lot of back and forth. There's a lot of ups and downs. Welcome to being an entrepreneur, right? So a lot of people get excited about this opportunity, but it's a lot of work. It's a lot of ups and downs in this business, and you have to have a strong conviction and belief in yourself that anything is possible.
Right. And then when you first got started in this space, Alex, did you join any investment group or any mentorship at mastermind type group to help learn and get you started?
Yeah, so that's a great question. In 2018, we went to several conferences together with Ashish, and we asked ourselves a question, which is, do we want to be an operators? Do we actually want to take down the properties and build the team and underwrite the deals, acquire and manage them? And one way was to obviously go that route, but then we met several other people that decided to open another door to us, which is a private equity. So we actually did not join any programs, any coaching programs, but luckily for us, we were able to connect with several mentors in a private equity world that kind of guided us and helped us to get where we are. And we still have this relationship. By the way, if you don't have a mentor or a coach, even though I recommend to join one of those masterminds, it's a must. I mean, without them, we definitely would not be where we are at this point.
That's awesome. So what would, I know you're from the Bay Area, and like, to me, I immediately think there's plenty of money there, right? There's so much money in the tech space. What was your biggest challenge in your first raise? Were you able to raise it pretty quickly because of all the friends that you're connected into in the tech space?
So I'm happy more experience about that. So I think it was early 2019 where we had our first website put together, and we just hosted investor kind of a lunch of our website and our business invitation party. And we had about 20-30 people that showed up, and we have a pretty large network of people. I've been in tech, my business partner has been in tech many years, so we have a lot of acquaintances, friends, and family. And we just said to people, at one point we will have a deal. And for the most part, people like, well, what are these guys up to? What are they going to do? What kind of deal? So we didn't tell them anything specific. At that point, we were still forming different partnerships because it's important that you place your capital and align with other partners that you know, that you like and trust. You have to do due diligence on your partners. I think a lot of people, for the most part, skip that step. They go to partnerships totally blind, not knowing the people, not knowing the partners. I strongly discourage people to do that. I think it's important that you get to know the people really well, because it's a long game. These are 3 to 5 year holds, sometimes longer. Some deals do not perform well. I've been part of several deals that I lost the entire capital because I didn't do the due diligence on the operator. Anyway, long story short, we hosted the party. We started to build our database of investors. We had our website, and we just couldn't find the deal that we liked. We just didn't like. We couldn't find the operator, the partner that we trusted and liked. And 6 months later, when we thought we were ready, the COVID started. And we were pitched the deal, and we're like, there is no way in hell we're doing the deal. It's the end of the world. Who knows what's going to happen? We just got totally scared and paralyzed with the decision. That was the fear, right? In order to grow, you're going to have to overcome that fear of unknown. You're going to have to put your neck out there and say, I'm committed to $1 million. I strongly believe in the deal. I don't know who is going to invest, but I'm going to make it happen. First raise was $500,000. And they couldn't close the deal for a while. But if you remember, at that time, the stock market tanked just like it is now, about 40%. And a lot of people were asking us, hey, guys, I'm ready to place my capital. Where is the deal? And we kept looking into several other deals. We looked at that deal. They couldn't close. They got some discount back. It was in a great location. We've known these people for about 8 months. So we've been in constant communication with them, even though when they presented as an opportunity, we said, no, we just don't feel we're ready to do this because we're super conservative. Number one goal for us, we don't want to lose capital for our investors. Forget about upside. We don't want to lose money. And, we look at the break-even occupancy, we look at the track record, we look at the location. There's many factors that we looked at it. And then we said, you know what? It's such a good location with the discounted offer that they received. We're going to do the deal. So we just blasted our email list, our investors, and we raised $500,000 within a few days.
Oh, wow.
And we never look back since then. We've gone to $1 million, $2 million, $3 million. Our last raise was $6 million.
That's awesome. Now, prior to you doing the first capital raise, how many deals that you invested in passively yourself?
Yeah, so I have been around the block for many years. I've done over 50 since 2015. And a lot of people say, oh my God, this guy must have had, huge net worth. I didn't. I started with a couple $100,000. I did some small crowd platform type of deals where I invested on 20, 25, sometimes 30,000. And some of them did really well, as I mentioned earlier, but some of them unfortunately didn't. So that was my number one lesson to myself. That's why I think I hesitated to launch this company. I was not sure that I have a strong conviction and knowledge how to evaluate the deals, how to find these good operators. And our model is such is that we work with very experienced operators that have fully integrated property management, that had 10 to 20 exits, some of them that had 30 exits. Some of them have 700 employees and over 3 billion under asset management. And it takes time to build this relationship with these people because for the most part, they're not looking for capital from strangers. You have to invest time to get to know them, and periodically they do need your help, but most of the time they don't because they have their own investor base.
Right. Yeah. So we're going to go into that in a little bit. Before we go into that, would you say that most of your investors are credit investors? And also, sort of a follow-up question to that is that, do you also have non-accredited investors that you work with?
Yeah, so we started in a co-GP model. I think a lot of people are starting in that model. And since then, we actually operate in a different model, which is a fund of fund, and we only take accredited investors. And the reason for that is that such that non-accredited investors potential headaches for you guys. So I strongly discourage everyone to non-accredited invest at all. And the reason for that is when you accredited investors have a network, you potentially, if things go well, you can lose their partial capital or potentially all of your capital. Unaccredited investors, it is a nightmare. They will potentially go after you, and they don't understand the risk. They don't understand many times what they're investing in. And we as a company, we decided to just deal with accredited investors. We just didn't want to work with non-accredited investors after about 2 deals. Gotcha.
Okay. So share with us, besides, I know you're big in the tech space. So would you say that the tech space are the bulk amount of your, what's the percentage of your investor database come from the tech space?
More than 50%. I mean, it does
50,
definitely help for you as somebody who is looking for investors to raise capital from people like you. So luckily for me and my business partner, our background has been in tech for many years. So we relate to them. We understand their pain points. We understand that even though they're making quite a bit of income, they're very stressed out. They work around the clock. They pay high taxes. They're always insecure about their job. Believe me, I've been laid off many times, and every time you go through this battle and questioning yourself, oh my God, I work for this company. I was a loyal employee. I was getting bonuses, promotion. What happened? And then on the last day of your job, they say, don't take it personal. I mean, what do you mean by that? I worked my ass for you, and you decided to lay me off, right? So that's a different understanding that you have to build with your potential investors, because ultimately people like to invest with people like you. They like and trust. You have to have something in common with them. But since then, we've built our investor list beyond tech and nationwide.
Who would you say is the second big segment of your investor list? What's their profile?
We have a lot of entrepreneurs. We have people that are business owners. I believe it or not, I have a lot of real estate syndicators and investors that are investing in our deals because we are high quality type of fund managers, right? We've turned out many deals. We're not a volume shop, even though you guys think that, oh my God, Alex has done so many deals. We've only done 15 in 3 years. Now, periodically, what we do is just like what Tim invested in, some of you on the call as well, we do large portfolios. So with a single check of $100,000, let's say, you can invest in 10 assets in 2,700 doors. We've done deals in 21 assets into 4,700 doors last year. And that's how we build our track record. That's how we, sort of differentiate ourselves from everybody else, because there's a lot of deals out there. If you start looking at what everybody is doing, it seems like there's so many deals out there, correct? So you need to find yourself, sort of a niche, why would they do business with you? What is your differentiator factor? Why would they invest with you versus somebody else?
So let's talk about that. I know you go after operators that have lots of experience that do these huge deals. And then the way you structure it's very interesting too. So share with everybody, what is your basic requirements when it comes to vetting this operator that you would go into their deals? Yeah.
Happy to share that information with you. So we start very slow. It's like a dating, the analogy that I have, it's a dating game. So, we send out an introduction email. Sometimes it's a referral from somebody. And at that point, we just have a process of just getting to know each other. Now, after about a couple of emails, we actually visit them. We fly to see their headquarters. Very few people actually do take time to get to know people to fly, because we're doing it on our own cost, right? And at that point, we're starting to get more understanding, what their operations like, how big they are. I mean, we do a lot of work up front as far as, what's their track record, how many deals have they done, how many deals have they gone full cycle. We look for operators that have that operational excellence of 10 or ideally 20 exits. I'm talking about full cycle exits. They're buying, rehabbing, ultimately selling for profit at 20% annual returns or more. And then at that point, if there is synergy, we're looking for that synergy. We're looking for that, do I want to deal, with this operator? Do they transparent? Are they transparent? Are they answering all your questions, or they're a little bit hesitating? Do they provide references? We ask them straight up, if we were to run background check on you, what will we find? Is there something that is concerning? I mean, most people don't do background checks on the operators. We do every year on every operator of the founder of the companies. And at that point, we're also looking to connect with other people in their company, with their underwriters, with the investor relationship person, with the property manager. We want to understand how they operate. How efficient are they? We tour several assets that they manage. We invest in their deals. as well. We want to see what kind of reporting do they provide to their passive investors as well. So that process usually takes 6 months and sometimes over a year.
Gotcha. Okay. And then so so it sounds like a lot of these would, they probably been in business for a long time, possibly
Correct.
even gone through the last market cycle as well. Is that correct?
Yes, yeah, some of them have gone through 2008, 2009.
That's good. Okay. And then how do you structure your fund to fund to be able to, get into these deals?
Yeah. So we create our own PPM. We create our own offering. A lot of times we create more economical returns for our investors. Each deal, as you know, is very unique. So our advantage is such that we are able to obviously invest, significant amount of dollars. We're talking about 5 million and up. So for a small investor, obviously they're getting retail type of investor returns. So in our case, we're able to negotiate different economics. Sometimes it's a higher pref, sometimes it's a higher IRR numbers.
Gotcha. Okay. And then I know some of your funds that you do, some of them are 506B, some are 506C.
Correct.
How do you decide that?
So it's actually the operator. So we do not have to any say in it, which offering that we must do. So we must follow their lead. So if it's a 506C, we're able to do 506CD deal. And then if it's 506B, for the most part, we actually have done 506B. In my personal opinion, it's actually a lot easier to raise funds. Now, some people say, well, you cannot publicly advertise. But if you have a pre-existing relationship with the person that in your CRM system, then it's a lot easier. They know, they like you, they trust you, and you don't need to have accreditation letter, which is not an easy thing to obtain from investors. Trust me, a lot of people just hate the process of getting accreditation letter. Right.
So in terms of your positioning when it comes to raising money from these investors, by like versus, and I'm comparing the way you do it, where you're raising capital for an experienced operator with lots of track record versus an syndicator that's their own operator, right? With their own track record. Yeah, with own projects. What do you think is the perceived value or the way that your investors perceive your type of deals versus the operators type of deals? Has they given you that kind of feedback at all? It's like, hey, Alex, I love your deals because of the operators behind them, or anything like that?
Yeah, so we are an additional due diligence. We are passive investors too, right? So we're completing due diligence on a deal and on the operator. Most people do not do that. They get excited about potential, high returns or, glamorous pictures that a lot of syndicators put out there. So we dig deeper in terms of, who is the operator, what is the track record, what could go wrong on a deal, what the underwriting looks like. Most people do not do that. So they rely on us to do that due diligence. Obviously, you have to earn the trust. So I've been involved in many transactions as a passive investor, so I know what to look for in terms of red flags, reserves, interest rates. Do they have a fully integrated property manager? Are they able to mitigate some of the risks that some of the newer emerging operators are not super familiar with? And in general, I personally think it's a lot easier, in my opinion, to raise capital for somebody, who's got 20 exits, because, obviously they're proven. They've tried it out. They know what works. They know that. By the way, not all deals also do well, even with experienced operators. Not all the deals go 20%. It's an average. We're looking for average annual returns. Hopefully, they have not had any losing investment, but some of them do, and some of them also have had home runs, right? So if you are in this game of real estate investing, if you stay long enough, you'll know that some projects actually will not do well, and it's okay. It's okay to perfectly fine to disclose that to investors. No, you know what? We've had a deal, we didn't do well. But on the other hand, we had other deal that we hit it out of the ballpark.
Right. I know that you know the way you do your fund to fund is different from others. You create a new PPM for each deal based on
Correct.
yeah, based on that deal structure versus creating just one fund that you use to to fund all the others. Can you share with us what do you see as the pros and cons? Like, why don't you just have one fund that your investors can invest in versus doing each PPM that way?
Sure. Yeah. So we actually experimented and thought about launching what's called blind fund, where people invest in a fund, not knowing, where their capital is going to be investing once we identify the assets. I personally don't like that concept. And so it's a sheesh, I'd like to know upfront where is my capital is going to. So when we do launch a fund, we actually tell people, here is the specific asset or a portfolio. This is where your funds are going to be placed at. Periodically, maybe there will be opportunities to buy some distressed properties. So you will need to have cash available to quickly act on that. But frankly speaking, we're not there yet, and we don't like that model.
Gotcha. Okay. I know you do a lot of social media marketing, and you also attend a lot of events. What would you say would your top 3 ways to find investors?
Sure. I think you need to stay in your lane in terms of being yourself. I think a lot of people just pretend to be somebody else. That's not okay. I mean, people can tell right away. So in my case, I post some real estate investing content, but I also post my personal life. I like to travel. I like to go to the music. I'm a football fan. I like sports. I have a cat. And people want to know your personality. Because ultimately people invest with people that they like and trust. So that's number 1. Number 2, always add value, right? So if you have some key takeaways, please share that. For example, Ko and Kerry, I've been in Oklahoma, so I brought them on a property tour with me. And I didn't know whether they'll invest. I just wanted to show them, what's possible. I was in Austin last week. I connected with Trevor. And I bring other investors with me, and I post it on social media. Here is the property tour. We're going to see, in Austin, Charlotte, Nashville, whichever city we're visiting. Just come meet me. And then periodically we organize, lunches or dinners, appreciation events or meetups. And so we constantly promote our brand and a potential investment opportunity. Now, I don't know whether some of these people will invest with me, but I just want to get to know them. I want to learn a little bit about them. I want to know what's motivating them. And if I can be of service, maybe we will not be investing together now, but potentially down the road. Remember, it's a partnership. It's a long game. A lot of people are, short-term thinkers. So you cannot do that. And just helping other people out, commenting on other people's posts. You don't want to be known on social media as somebody who is just a taker. You also need to be a giver. So, if somebody is closing the deal, put a comment out there. Congratulations, I'm happy for you. It's a lot of work. It's a tough business. As I mentioned earlier, there's a lot of up and down. There's a lot of rejections, and just be nice and helpful and continuously add value to other people.
That's awesome. And yeah, so property tours, posting about your life, getting people to know you personally, right? So those are things. Yeah, so like building long-term relationships with people. You think of everything in terms of partnerships, which
Correct.
I like that a lot.
I was in Hunter Thompson Mastermind. By the way, I am a part of Mastermind. I strongly recommend the Mastermind as well. I learned a lot from Hunter. He is one of the mentors that we have. And I always talk about partnerships. I always talk about it's a team game. It's a team effort. Real estate is a team sport. It's one of my slogans. Together we grow faster. Because frankly speaking, you cannot do commercial real estate on your own. It's just not possible. You need to invest time in building relationships and finding supplemental skills to you that you might not possess. Because I'm also a strong believer that each one of us has that X factor where they are in their zone and they love doing what they're doing. In my case, I love educating. I love sharing. I love explaining to people different type of deals and just connecting on a personal level as well. But some people don't. Some people are more introverted and they like analysis of the deals and underwriting or property management.
Yeah, so let's talk about that, because I know starting out, almost everybody think that, oh, I got to start out finding the deal, underwriting the deal, like starting out as an operator.
Yes.
But you came into the industry asking that question from the very beginning, like, do I even want to be an operator?
Correct.
And you choosing to be a capital raiser. So share with us, like, give the people listening, if they're starting out and they're considering, well, which route should I take? Give us some of your insights into how you think about that. What?
Yes.
Yeah.
Correct. Yeah. So as I was describing earlier, I think it took us close to 6 months before we made the decision not to become an operator. We considered and analyzed, all the coaching programs out there. You Brett Samrock, which is an amazing guy, Barman King, Rod Cliff, Michael Blank, like which program is the best? Where do we feel? And then at one point we said, we like all of them, but we don't want to be in any of them. And the reason for that, because we decided to become laser focused on investor relations. We didn't want to be on acquisition side and finance because we thought our X factor is actually investor relationship. We know a lot of people, we like working with people. We like that side of the business because end of the day, I'm sorry to burst your bubble. You're not the Superman that you think you are. You're not going to be able to find the deal, underwrite the deal, make investor calls and manage the property. You're not. And the sooner I think you realize that, the easier and more fun your life will become. Because if you become laser focused and become a specialist instead of generalist, this is how you want to be known as. You want to be known as somebody who is great at. And it was a struggle in the beginning. And since then, we never look back. I mean, this is why we've gone through, 6, 12, 25 million dollars. This year, we're going to do 25 to 30 million dollars because we have in capital raising, because we stayed in our own lane. Does this make sense?
Yeah, it makes a lot of sense. Because I mean, I'm fairly new into the syndication spaces. I had to go through that thinking process for myself, for sure. And then one of my friends who's on here, Javier Hinojo, suggested that I focus on capital raising. And so, so here I am, right? And I'm doing this show. he's giving us a thumbs up there. And so it's a very interesting process to go through and analyze for sure, what plays well with your strengths, your personality. Yeah, I think I agree with you in the sense of, I don't think I'll be a good operator. That's not my strength. And I would hate having to underwrite all the time. That would be, that would not be something I would enjoy.
And by the way, sometimes people have a hard time understanding what their X factor. There's plenty of, quizzes, online quizzes that are out there that can help you. So one of them, for example, is DISC from Tony Robbins. So it kind of helps you to determine what is your personality. Where are you going to be more happier? Because end of the day, you want to have fun. You want to enjoy the work that you do in something that you truly enjoy instead of, I have to make 100 calls or I have to analyze 100 properties. Some people are good at that and some people are not. So you want to be able to find what your X factor sooner rather than later, and you'll have a lot of fun doing it. Right now, my job, I don't treat it as a job. I mean, I work sometimes long hours, sometimes I can take a month off as well, but I truly enjoy what I do, and so should you. You should find some opportunity to bring that massive value to people that you truly enjoy day in and day out.
Right. In terms of, strategy on how you, how you get good with being an investor relations person. One of a friend of mine I was talking to, currently he's doing 11 appointments a day. phone, Zoom appointments, right? That's his strategy. It's like every day I have to meet 11 people. I have to talk to, not meet necessarily, talk to 11 people. Do you have a similar strategy? Like, do you have a set number of people that is your goal to talk to each day?
As far as KPIs, we're still kind of emerging. Our investor list has grown from 100 contacts to 3,000 in 3 years. So I'm just showing you what's possible.
Right.
We've done a lot of educational webinars. We host in-person events. Sometimes we travel, so we're not able to arrange, some of these things. So it's kind of, flowing. In our case, what has worked really well is meeting people. Meeting people face to face after the Zoom call, right? So a lot of people kind of skip that step of not investing in, meeting people face to face is a game changer in our case, because most likely the chances, even on 506c deal, if you think about it, just because the deal is great, converting a stranger from social media is not easy, and the chances of that are very small. But we do like to collect that information from a lot of leads from social media, and over time they convert. But you also have to be able to add, valuable content through newsletters or through additional webinars, and ultimately you want to meet them. We were in Florida just last week, and I met a person. We spent about 3 hours talking about business, life, real estate investments. This is the first time I met this person, but I've had a lot of calls with them, and we're going to do more business with them because I take time to meet and get to know people.
That's good. What are some of your favorite tools that you like to use in your business?
Well, Active Campaign is a must, or there's other tools out there. So you need to have email marketing system as soon as possible. If you don't, because you're gonna spend so much time emailing people individually, it's just gonna kill your desire to do this business. It's a very time-consuming effort. We also integrated Active Campaign with another tool called Sales Message. So it allows people, it allows us to text people as well. As you know, some people don't read emails. There are so many emails out there. So you're competing against many other email marketers that are out there. So we integrate that into Active Campaign. So I strongly recommend that tool. What else we're using? Well, we use Zoom a lot. We use Zoom a lot as well.
Okay, awesome.
We also use Monday.com to kind of track our tasks, what kind of tasks we have to do on a day-to-day or weekly or monthly basis.
Okay, awesome. Well, thank you. So what's, with the market sort of changing as quickly as it is, are you doing anything differently in how you're planning to navigate this market versus, how it's been in the last few years?
Yeah, that's a great question. So, we've done quite a bit number of deals recently. We turned down several deals over the last few weeks as well, because we just feel like there might be some opportunities in a Q4 that might have a lower purchase price. We look at to be super conservative as far as reserves, as far as interest rates, as far as which markets we want to invest. So we turned down some deals in smaller markets. We just didn't feel more comfortable. We're also starting to look around and expand our offering portfolio beyond multifamily. So over the last several weeks, we've toured several operators' headquarters and started talking about other sectors such as industrial, medical office buildings, ATM funds. We also are looking into RV parks. We think multifamily is probably the least riskiest, but at the same time, the market has done so well. It might be a good idea to start looking around at other assets and continue diversification for our investors, because ultimately we have a lot of repeat investors that have done several deals in multifamily, and it's probably prudent and a good idea to diversify their portfolio by offering other asset classes.
That's awesome. And what's your, I mean, you accomplished so much in so little time. What's your big goal? What's your grand vision?
So our goal is to get to 1,000 investors over the next 2 years. We're at about 300 at this point. We're going to get to $150 million over the next several years and just give back. Ashish and I, we lost our fathers due to cancer, and we support Cancer Foundation, and hopefully there will be a cure to this disease.
I see. What would you say? I'd love to, I'm trying to get an idea of what 1,000 investors mean for you. What is the average check size, investment size for each of your investors?
It's about $100,000.
Okay.
So although we've had some investors at 50K, we have a lot of repeat investors, and we've had some, huge check writers at even $500,000 rate.
Gotcha. Okay. We're going to be wrapping this up. Any last words of wisdom that you'd like to share with everybody today?
Yeah, so I'd like to wrap it up with a couple of things, which is number one, get a mentor as soon as possible. If you don't have one, just find somebody who you want to model and who you want to be at one point, sooner rather than later in your life. Now, a lot of people ask me is, how do you find your mentor? So you need to find something of value to them. If you just want to ask somebody, hey, can you be my mentor? That might not be an enticing proposition to them. A lot of these people are super busy and they might not find time for you. So you need to figure out, what motivates them to mentor you. Another thing that I wanted to emphasize on is, again, the mindset. The little monkey voice in the beginning is a very strong and loud voice, and you need to shut it down and believe in yourself. I'm a strong believer in mindset. I'm a huge raving fan of Tony Robbins, who has helped me personally to turn my life around with affirmations and just be positive. Just believe in yourself, take massive action, and success is inevitable. If you take enough action and fail forward, a lot of times there's a lot of failure that, like I already discussed earlier, success is inevitable for you.
Awesome. Well, Alex, thank you so much for doing this interview with me. And I know it's last minute. In case you guys didn't realize that Dan Hanford was scheduled to be on today, and he had a last minute emergency, couldn't make it on. And so Alex was graciously enough to come on last minute with us. So Alex, thank you so much. I really appreciate you for being on here and for sharing your wisdom with everybody on here today.
Yeah. Thank you, Tim. Thank you, everyone. I'm pretty approachable. So in case you're just starting out and you're interested in a fund model working with the experienced operators, please reach out to me. I've been around the block a little bit, so I know how to get started and how to help you. My website is wealthymindinvestments.com, and please email me at alex@wealthymindinvestments.com. I'm happy to stay a little bit longer and maybe join one of the group sessions.
Well, yeah, we're gonna open up for Q&A now. So yeah, just so we can have this section complete for the podcast.
Sure.
So yeah, thanks for being on.